you know, learn how to trade digital assets. So today I'll be talking about strategies for digital asset trading. Okay, strategies for digital asset trading. Before then, I would like to know where you are watching from. If you are watching from Ghana, Nigeria, South Africa, India, let me know in the comment section. Most importantly, I want this session, to be more interactive and more engaging. So I would like to interact with you if you're watching. So do well to respond in the comment section while we flow together. All right. So strategies for digital asset trading. This is a very important subject matter in our current dispensation, where we have a fast rising asset class, like cryptocurrencies. Now they are digital assets, and fast growing taste and interest in digital assets. All right, and this is very important, that we bring it to you and let you understand how digital asset works. All right. Thank you very much, Aminu A Ibrahim from Nigeria. Thank you very much, Smart Dev from Ghana. Thank you very much, Sonu, watching from India. Oh, thank you very much, Forex Trader 6273 watching from India. All right, I want this session to be very interactive, and I want you guys to maximize today's session and learn very well. So today we are looking at digital asset. Like I said, digital assets is now becoming a fast rising asset class that that is being traded in the financial market. All right, and it is being taught wise that we teach you what these digital assets is all about, and how to trade them, strategies to trade them. Godwin, thank you for joining from Ghana. I see you. Kuma, thank you for joining from India. All right, so before we dive deep into our session now, I want you to get this information, very important, that we have a promo that is currently ongoing, and this promo is to help you double your deposit. Okay, the promo is to help you double your deposit, and being able to trade with a double of your deposit. And the promo code is asset 100. So you have to take advantage of this promo code in 5 steps. You open the OctaFX trading app, or you visit the official website. You go to your profile, you find the promo code section in the menu, you enter the promo code, and you press activate. You make a deposit and enjoy your deposit. All right. Thank you very much, Ghost Time. You said watching from Nigeria. Thank you. All right. So here is a brief introduction to digital assets, strategies to trading digital assets. All right. So in this session, I will be talking about very key areas that are pivotal and important to this session, or to digital asset trading. Number one is fundamental analysis for cryptocurrency trading. Number two is technical tools and techniques. Number three is risk management strategies. Number four is market psychology. Number five is developing a trading plan. Number six is strategies for successful crypto trading. Number seven, which is the last one, is advanced trading techniques. All right, follow me. This is very important right now. And if you have any question, you can always engage in the comment section. All right, so when we talk about fundamental analysis for cryptocurrency trading, now it is important for us to know that cryptocurrency as a digital asset has its own fundamental factors that actually impact its growth and potential. All right, now we as traders and analysts need to pay attention to these factors influencing the digital asset space. Now, factors influencing the digital asset space, all right, are unique to the digital asset space. So factors influencing the buying and selling of cryptocurrency are unique to crypto trading. All right, and it is this uniqueness we want to take cognizance of and learn on how to leverage on it and develop a winning strategy. Now, number one of this fundamental analysis is for us to evaluate the intrinsic value of the cryptocurrency. Now, what do I mean by evaluating the intrinsic value of the cryptocurrency? It's important for you to know that when trading cryptocurrency, all right, you are looking at what is the potential worth of this token or of this cryptocurrency. So if a cryptocurrency is trading at, say, let's say Bitcoin, for example, is trading at 15. Okay, let's say Bitcoin is trading at $15,000. All right, but we see the potential of Bitcoin at 60K. Okay, we see the potential of Bitcoin at 30K, and it's currently trading at 15K. The intrinsic value that we as traders are seeing in Bitcoin is at 30K level, but the current price level is 15K, which means Bitcoin is currently trading at 15K, but we are seeing the intrinsic value at 30K. Okay, now what do you think you want to do as a trader? You want to buy the Bitcoin, all right, so that when it rises to the intrinsic value you think it should be, which is 30K, you will make profit from the difference. All right, that is what we call the evaluating the intrinsic value, like looking at a particular digital asset and asking and getting to know what is the potential value of this asset, currently worth. Okay, so you are looking at the intrinsic value minus the current value. Another way of fundamentally analyzing the cryptocurrency market is analyzing market trends, news, and events. Okay, now when there are some trends that are peculiar to Bitcoin. Okay, like Bitcoin halving. All right, Bitcoin halving, when it happens, there is a potential way of whereby Bitcoin can scale up. All right, because now with Bitcoin halving, now it is reducing the circulation of Bitcoin in the ecosystem, and by so doing increasing the demand. So as demand increase and supply decrease, what happens? Price goes up. So those are the events that you want to look into. You want to study what actually moves Bitcoin. What events can actually happen right now and make Bitcoin to go bullish? Or what events can actually happen right now and make Bitcoin to go bearish? When you are able to evaluate the market trends, the news, and also the events around these digital assets, you will be able to trade them profitably. All right. Another way to fundamentally analyze cryptocurrency market is by assessing the technology, the team, and the partnerships behind this cryptocurrency. Now, it is important that you understand that in the cryptocurrency world, okay, it evolves around community. All right, it evolves around human participation. All right, because the more you participate in a potential cryptocurrency project, the more the value of the cryptocurrency increases. Okay, so you might use that to evaluate it. All right, that's okay. Should I buy into Ethereum? Why should I buy into Ethereum? You look at the team building Ethereum, you look at the technology and the solution that Ethereum is providing, you look at the partnerships an involvement of institutions and individuals in Ethereum. Okay, and this would now be part of the factors that you will use to deduce if Ethereum is a potential buy or Ethereum is a potential sell. Now, let's talk about technical analysis tools, all right, and techniques. When we want to analyze the cryptocurrency market, we've previously explained that there are two types of analysis, two major types of analysis. We have the fundamental analysis, we have the technical analysis as well, and the third one is the sentimental analysis. We've looked at the fundamental analysis, and now we are looking at the technical analysis. The technical analysis has to do with using chart patterns, price movements to justify or to predetermine the movement of price. Okay, so when you look at this, okay, when you look at this now, we call this pattern head and shoulder pattern. This is head and shoulder in the sense that when you look at this particular region, you will see that price came up here, all right, could not go up further, came down, and then went up above this level, okay, came down again, went up to this previous level that it was previously resisted here. Okay, so we can see that it created an edge here, it equally created another edge here. So these sides now is said to be the shoulders. All right, this side is said to be the shoulder. All right, and this is said to be the head. When you see a chart pattern like this, it's a bearish movement. Price will continue to fall. Okay, price will continue to fall when you see a chart pattern like this. All right, price will continue to fall. Let me see. Okay, so when you now see the reverse, when you see it turn like the opposite of this, just like what we have here now, we call it the inverse head and shoulder. The inverse head and shoulder, like here is the neck, all right, here is one shoulder, here is the second shoulder, and here is the head. And then we call it inverse head and shoulder because now the head and shoulder are upside down, unlike this one that it's upside, like it's it's facing upside downward. It's facing downward, all right, where we have the head, okay, facing up, the shoulders also facing up. But in the inverse head and shoulder, we have the head and the shoulder facing down. All right, so when you see this inverse head and shoulder pattern, what that is telling you is that what price is moving upward, is going bullish. Now this chart pattern is the chart pattern you see when market is about to reverse its current direction. All right, when market is about to reverse its current direction, you will definitely see it play out this way. Okay, you will definitely see it play out this way. So technical analysis tools and techniques. Now this involve the use of what? Of price prediction, okay, using price movement to predict the future. Okay, now one way to carry out technical analysis is to analyze the historical prices and volume of the digital asset. So you are looking at what is the historical price. Okay, now let's see on a practical note how this works. So this is Bitcoin now. All right, what this is telling us here, when we talk about analyzing the historical price and volume. So as a technical analysis, you are looking at the past price movement. Okay, so you are looking at Bitcoin in the last 1 week. Okay, you look at it. So you look at the price movement around Bitcoin. Now, by using the price movement to predict its future movement, so you come here and say, okay, you are looking at price movement here, analyzing levels where it got to, okay, and it's the last higher high, okay. The all-time high of Bitcoin was around 68k, okay, was around 68k. So currently the price is ranging at 29,000, okay, and you are looking at it. So by using the previous historical price movement to analyze the market is part of what we are talking about in technical analysis, okay. And here when you now talk about analyzing chart patterns and indicator, now when you go back here, analyzing chart patterns, now when you look at this pattern, okay, this chart pattern here, when you look at this closely now, this chart pattern here looks like what we call the what is it called now, double bottom, okay. You come here, see something like this, okay, see this double bottom, okay. When you see something like this, you definitely know that price would fall, okay. Let's look at it on the daily time frame. So you can see what we are already doing now. We are already looking out for chart patterns. That is one of the ways to actually analyze the market, using chart patterns. Okay, good. So we use chart patterns to analyze the market. By so doing, you are carrying out technical analysis. Those are ways to what? Carry out technical analysis. All right. And then we have analyzing trends. Analyzing trends. When you talk about analyzing trends, this is more like having to look at, still on price action, okay. You are analyzing the trend, the market movement. Look at how Bitcoin has been moving for the past days, okay. I want to draw out something here. Okay, look at how Bitcoin has been moving for days. So Bitcoin has actually just been moving within this range since May, okay, May 2022, all right, and finally broke out of that range, okay, of this triangular rectangular shape, just as at June 2023. Okay, now it has now broken out of it now, but you can see that it is consolidating here. Okay, it is consolidating here, and not just only consolidating, it is also trying to get back into that rectangle. Okay, it's trying to get back into that rectangle. You can see it. It's trying to get back into this rectangle. Okay, now this says a lot. All right, so which means now from our analysis now we've seen that Bitcoin has been ranging within this rectangular box for months now. Okay, and after breaking out of this box on the 23rd of June, sorry, 21st of June 2023, okay, it has been ranging. Okay, and currently it is even ranging downward, trying to break into this level. So which means now if Bitcoin breaks back into this level now, we will just see it playing around at this level. Okay, we'll just see it playing around at this level for some time. All right, maybe come down here, go up, come down, go up, come down, go up, and maybe finally come back again before making the next decision. But for now, if Bitcoin breaks into this level, okay, if it breaks into this level, we might see it continually fall. All right, so that is how to carry out part of the technical analysis. All right, good. Now, what are the common tools in technical analysis? We have the candlestick pattern. The candlestick pattern, where you have to look at the type of candlestick, where it opened, where it closed, at what level did the candlestick appear, what type of candlestick is this. So those are part of technical analysis. Okay, we have trend lines, we have moving averages. So let's look at the first three. Talking about candlestick patterns, trend line, and moving average. So when you look at this now, look at this candlestick here, you would agree with me that this candle moved from here and closed up here. Okay, when you look towards the left, I'm talking about this side, do you see any other candle of that height at that same level? No, but we can see that there was something like that at this level, right? But not until this candle came and closed above this level. Okay, so that price kept going down. Let me clear off this thing. Okay, you discover that it took price coming to close above this previous higher high, okay, for the bullish movement here to be confirmed. Can you see that even after this day, the second day, the market went so high and broke out of this level? All right, that is some candlestick pattern to watch out for. All right, there's some other candlestick pattern to also watch out for, like this. Okay, so you look at this candlestick pattern now, it came out like, say, we call it pin bar, okay, or we call it hammer. So this bullish pin bar now is facing, it has a long wick downward and a little body upward. It's showing that there is price pressure up. All right, price is being pressured up. That's what this is saying. Let me zoom in. Here, you can see it. This is it. That's what this candlestick is saying here. Price is being pressured up. Okay, price is being pressured up here, and that is why you see this kind of movement. Okay, price is being pressured up. So because of this candlestick, now this candlestick already gave a signal. it's a reversal candlestick. This candlestick appears, when it appears at a key level like a support level like this, it's showing a reversal pattern, a reversal, indicating a reversal in the market. And that is what we see here after it appeared. You can see the reversal. Okay, good. So we also talked about trend line. I've explained that earlier. Then we talked about moving average. So let's see now. It's important that let's see if we can get moving average here. Okay, moving average exponential, moving average simple. Okay, let's just change this to let's use good. Okay, so as we can see here, we have exponential moving average, and the blue line is the exponential moving average. The brown line is the simple moving average. Okay, so this can also be used to predict price movement. Now if you look closely now, you will discover that you see that it is at levels where when the moving average goes above the candlestick, it shows that the price is going down. All right, but if the moving average comes below the candlestick, it shows that the price is going up. So if you zoom in closely here, you will see that for every bullish movement, all right, the moving average came under the candlestick. Okay, and for every bearish movement, the moving average was above the candlestick. So this can also be used for technical analysis. So look at what is happening here now. Where do we see this moving average? Above the candlestick or below the candlestick? Let me know in the comment section. I want this section to be interactive so that you can get to understand how to use moving averages. All right, looking at this here now, looking at this moving average, what do you expect price to do? Where is the moving average currently at, and what does this mean for price? Let me know in the comment section. I've just explained it. I'm waiting for you. I'm waiting for God's Time from Ghana. I'm waiting for Kuma from India. I'm waiting for Ibrahim from Nigeria. I'm waiting for Smart Dev from Ghana. All right, let me know let me know what you think in the comment section. God's Time, I'm waiting for you. I explained here what it means when the moving average is below the candlestick. It means the price is going up, and when the moving average is above the candlestick, it means price is going down. So here now, looking at this and looking at the moving average on this now, what do you expect of price here at this level? I'm waiting. Where are you guys? Let me know in the comment section. I'm waiting for you. I believe you are following. Okay, I'm waiting. Okay, who is the first to drop an answer? God's Time, are you there? Smart Sonu, are you there? I believe you've been following me. All right, let me know what you think with regards to my question. Looking at this moving average here now, what does this mean for price? Okay, maybe you are still typing, so not to take our time, I will just proceed from here. So technical analysis, analytical techniques for market analysis and trading insights are just some things we need to know. All right, analyzing market trends and news, and also specific events to cryptocurrency. Okay, getting to identify the levels of support and resistance is also very critical. Examining trading volumes in cryptocurrency exchange is also very, very important. Now, let's talk about technical analysis tools and techniques with regards to chart patterns. All right, so like there are two main chart patterns. Okay, there are two main chart patterns. One, we have the continuation pattern, and two, we have the reversal pattern. One, we have the continuation pattern, and two, we have the reversal pattern. Now, when we talk about the continuation pattern, okay, when we talk about the continuation pattern, these are the type of continuation pattern. So these are patterns that you see, or patterns that appear when the market wants to keep going in the same direction it had been going before. All right, when the market wants to keep going in the same direction it had been going before. So looking at this chart pattern, we call the bullish flag. All right, so say market has been going up for a while and then does like as though it is going down, it might just be a bullish flag. All right, so when you see it creating a channel, zigzag channel in a slant format, then there are higher chances that it is a potential bullish flag pattern, showing that price will still continue upward. All right, and here we have bullish pennant pattern. Okay, bullish pennant pattern here. Okay, and price keeps going higher. Price keeps going higher. So here now the pattern is showing like as though price is squeezing up, okay, into a single direction. However, it's an indication that what price wants to continue in its previous direction. So this also bullish falling wedge. So if you look closely at it now, they have different shape, okay, via which the price is diving into. Okay, so here we can see ascending triangle is a continuation pattern. It's a continuation pattern. So when price goes up and slows down a bit, but it maintains the same resistance zone, but is not showing any sign of falling back. Okay, it keeps closing at a higher high, which means the previous close is higher than the previous high of the previous high. Okay, that's higher high. So if the market keeps closing at a higher high with the price constantly touching a particular resistance zone, that's what an ascending triangle. Okay, and that's a continuation pattern in the direction via which price had set out from previously. Okay, so these chart patterns are numerous, but understanding them and looking out for specific ones would actually pay off. Okay, for me, I look out for the ascending triangle and the descending triangle. All right, they seem to be one of those predominant patterns that shows up more in the market. All right, so you can also look into other chart patterns, study them, and use them to seek leverage in trading digital assets. Let's look at reversal patterns. Now, reversal patterns are patterns that appears when market is going to turn back from its current direction. So if you look at this here now, if price had been on a bullish movement, all right, when a double top appears, it automatically means that our price is going to fall. Okay, and here when a head and shoulder appears, it definitely means that price is reversing. If the price has been going up for a while and a head and shoulder appears, it shows that our price is reversing. All right, and then bearish rising wedge as well. When you see a bearish rising wedge, okay, in a bullish after a bullish momentum, okay, we definitely expect that our price will keep falling. So if you observe this reversal pattern of the bearish rising wedge and compare it to the bullish falling wedge, you will discover that when it comes to the bullish falling wedge, price seems to be falling, okay, but it will rise in the same direction it has started. All right, but it's a different ball game for the bearish rising wedge, okay, because the bearish rising wedge now, price will be rising. However, it is a pattern that shows that price wants to fall. Okay, so these are important chart patterns to look out for in the market. So they are continuation chart pattern, and they are also reversal chart pattern. Taking time to look into this and practicalize, putting them into practice, helps you get better and also helps you spot them more in the market. One of the important things that you should not joke with or take for granted in trading digital assets is risk management strategies. Risk management strategies. Setting your stop loss order is a non-negotiable, should be a non-negotiable, instruction. All right, because your stop loss order is to help you cut short your losses, your potential losses in the market. Also, using a take profit order is also very essential, because a profit not taken is not yours. Nobody tells you that, but it's a fact. If you don't take profit, you cannot make profit. So take profit order is a very important risk management strategy. Another risk management strategy is diversifying your portfolio. Of course, the popular saying says, don't put your egg in a single basket. Okay? Another one is you look out for stay informed. All right? Stay informed. It's very important for you to stay informed in the crypto space. When I mean stay informed, stay on top of information, the latest information. You want to understand it, you want to consume it, you want to be in the know. All right? So that is going to help you in managing your risk trading digital assets. Another risk management strategy is setting realistic targets. The digital assets are still also risky and volatile. However, they also have the potential of making profit, helping you make profit. All right. So it is important that you don't set unrealistic targets and then overtrade and blow up your account. No, set realistic targets. 1% a day, 0.5% a day. It's enough. Conduct thorough research analysis. Very important. When trading digital assets, conduct it. Understand what the state of BTC is, or Ethereum, or Ripple, or whatsoever token you are interested in trading on the OctaFX platform. Get to understand it. Do thorough research. All right, before you take a decision on either to buy or to sell. Avoid emotional trading. Avoid emotional trading. When trading digital assets, consider fundamental analysis in conjunction with technical analysis. None of these two analyses are independent of one another. All right, so they are mutually inclusive. Okay, so this is a very important risk management strategy I've shared with you. Here is another opportunity for you to double your deposit using this promo code asset100. How do you take advantage of this? Go straight to your OctaFX trading app, visit our official website and go to your profile. Find the promo code section in the menu, enter the promo code and click on activate. Once done, make a deposit and enjoy your bonus. We hope this helps. Market psychology. The collective emotions, beliefs, and behavior of market participants that influence the price movement and overall dynamics of the cryptocurrency market. Now, it's important that you also understand your psychology, okay? Because psychology plays a big role in your success as a trader. Now, market psychology can be attributed to fear and greed. Fear of missing out or greed of making more, unrealistic targets. Also the herd mentality, following the crowd. Everybody is doing this, then you want to do it. Everybody is using this lot size to trade, then you want to use the lot size to trade. Overreaction and FOMO. Overreaction and FOMO is also very important. Okay? Psychological support and resistance level. Like you've already set a psychological support and resistance level you don't want to break out through. It's important that you help yourself, you free up yourself, you open up yourself to new ideas, to new horizons, to be able to explore other factors so that you get to be on top of your game. Another market psychology that can influence your decision is emotional or sentimental control. Try to stay out of sentimental control and also emotional trading. Now, how do you deal with market psychology? Number one, understand the impact of emotions on trading decision. So if you want to trade now, you're asking yourself, why am I making this decision? What is the why behind my decision? Okay? Recognize and manage your emotions. When it is a fear of missing out, you need to recognize it. And you need to tell yourself to calm down. Alright? Because the market is not running away. Opportunities always present itself. It is in another area where people say, oh, opportunity comes but once. That's not true in the market. Alright? As trading is concerned, opportunities will always show up. Another way to deal with market psychology is develop discipline and patience. Okay? And also have a trading plan. Have a trading plan. What level you want to buy, what level you want to sell, what target you want to reach. Have a trading plan and work towards it. Stick with your predetermined strategy. It's more like when you get a strategy that works for you, just rinse and repeat. Rinse and repeat. Developing a trading plan is cannot be overemphasized. Alright? Establish a clear trading objective and goal. When developing a trading plan, consider establishing a clear trading objective and goals. And number two, you want to look at choosing your strategy. Are you leveraging on indicators? Are you a price action trader? Just chart patterns? Are you do you see support and resistance as your biggest level to win? These are opportunities for you to add to your trading plan. Determine what time frame you want to use. Like, are you the 4 hours guy, 4 hours time frame guy? Are you a position trader? Are you an intraday trader, an intraday trader? You want to determine what time frame do you want to use as your level playing ground. Choose which cryptocurrency to trade and determine the appropriate size area, determine the appropriate position size that you want to use. Now, still on developing a trading plan, establish a specific entry and exit point for your trade. Okay? Establish a specific exit and entry point for your trade, because this would equally help you, all right, to make good decision, because you need to know when you want to enter into the market and when you need to exit the market. Okay? Now, you also need to formulate a risk management strategy to protect your capital. You look at your capital, you want to look at, okay, how much are you willing to lose on the trade, get to know your position size, okay, how much you want to risk on a single trade, how much you want to risk on 2 trades and the likes like that. Then implement and closely monitor your trading plan. Regularly evaluate and adjust your plan as necessary. It's a very, very important things to note. Now, strategies for successful crypto trading. Now, I'm going to talk about this because it's going to help you, number one, to understand yourself, areas you need to focus on, all right, and opportunities that are there for you. We have the buy and hold strategy. This is a strategy whereby you buy into a digital asset and you just keep holding. So there are people who have been holding Bitcoin since when it was $100, all right, since when it was $10, and they keep holding Bitcoin. There are people who have been holding onto Ethereum since when it was $3, all right, and that's the buy and hold strategy. There are people who they trade, okay, they buy and sell within the day. Before the market closes, they sell off the cryptocurrency. All right. Then there are swing traders. They can buy today and sell next week, sell next month. And there are those we call the scalpers. They buy within the small time frames, like 1 minute, 2 minutes, 3 minutes, 5 minutes, 30 minutes, 15 minutes. They just enter and exit the market swiftly. Those are the scalp trading. Then we have the dollar cost averaging. Those are people who buy, who keep buying when price keeps falling. Okay? So those who buys when price falls and buys again at the lower level, and price falls and buys again, that's dollar cost averaging. Then the strategies for successful crypto trading, like I explained earlier, there is swing trading, breakout trading, news trading, futures trading, arbitrage trading, high frequency trading, range trading, and trend trading. As this is brought to you as an insight, it's also expected of you to pick one of these and study and start evaluating what area would you best fit in. Now, what are the guides that you need to stay profitable? Number one, invest in what you can afford. Number two, take your gains often. Like I said earlier, a profit not taken is not your profit. If you don't take profit, you can't make profit. Another guide to stay profitable is do your own research. Okay? Study, look out for potential cryptocurrency trade, and execute based on your research. Prioritize liquidity. Don't get into an illiquid market or when market is not moving. All right, get into the market when it is very much active. Manage your risk as well. You don't want to over leverage, you don't want to expose yourself to too much risk, so you have to manage your risk. Diversifying your portfolio, don't just hold on to single token or crypto. Try to diversify. These are very, very important areas for you, all right, to stay profitable. Then follow the trend. Okay, keep yourself up to date with the news, all right, what is going on, and the like. It helps you stay informed. Then use stop loss and take profit orders. They are going to help you to stay profitable. Use stop loss and take profit orders. Also, continuous learning and adaptation. With continuous learning and adaptation, you get to what? You get to develop yourself. You get to know more. You get to be more inclined with what is going on in the market. Now, when we look at advanced trading techniques, okay, what are the advanced trading techniques you can use when trading digital assets? We have leverage trading and we have margin trading. Okay, leverage trading and we have margin trading. Leverage trading helps you to trade more than your account deposit. All right, so you are able to cover a larger part of the market, okay, with just small amounts in your account. We have the algorithmic trading and trading bots, all right, of which you can always use on our platform. Okay, short selling and going long. Maybe you are shorting the market or you are buying up. Those are advanced technical trading strategies. Okay, we have arbitrage, we have hedging strategies whereby when you buy into a particular crypto digital asset and it goes up, you can now move your stop loss above your entry level. So even when market goes back against you, you will still take a little profit that remains from the market. So I want to open up this section for questions and answer. If you have any question and answer, let me know in the comment section. If you have any question and answer, I'm waiting for you. Let me know in the comment section. If you have any question and answer, let me know in the comment section. I'm waiting. If you have any question, let me know in the comment section. Ask your question, guys. Ask your question. Ask your question. If you have any question, let me know in the comment section. Okay, if you have any question, let me know in the comment section. Any question? So if you tell me from what you've learned and from the strategies I've shared, all right, and from the chart patterns I've talked about, tell me the two types of chart patterns that we have. The two types of chart patterns that we have. Okay, let me know in the comment section the two types of chart patterns that we have. I'm waiting. Let me know the two types of chart patterns that we have. Okay, let me know in the comment section, guys, the two types of chart patterns that we have. Let me know the two types of chart patterns that we have. Okay. So in the absence of no question, I want to believe that you are saying that you understand it perfectly. All right. So this is to encourage you that this session is designed to help you get started with digital assets trading, okay, which is crypto trading. Now, crypto trading, has its own level of risk and also profit potential. Having to look into it is also an added advantage to you as a trader. All right, add digital assets to your portfolio and get to expand and diversify your portfolio. This session continues next week, and I look forward to seeing you on the session, and also look forward to having you invite your friends to join us as we dive deeper into digital asset trading. All right, so thank you very much for joining. Don't forget to use this promo code ASSET100 to double your deposit, while using OctaFX. How do you take advantage of this promo code? You go to your OctaFX trading app, or you visit our official website. You go to your profile and you find the promotional promo code section. You enter the promo code and you press on activate. When you do that, make a deposit and enjoy your bonus. Okay, I can see Okonkwo says, good. Thank you very much, Okonkwo, for your reply, and it's very well understood. Thank you very much for your contribution. And you said continuous and reverse chart pattern. Yes, that is absolutely correct. That's absolutely correct. It is continuous and reverse chart pattern. Okay, thank you very much. Next week, please do well to invite your friends. Don't be the only one to have this knowledge yourself. Tell your friends about it. Invite others to join us at our next session by next week. Thank you very much, and see you next week.